Hi guys, it's Jake, the CEO of IYF Trading here. This is the first video in our weekly series, Trades to Watch this week, where we're going to pull out and discuss a couple of the ideas our head trader is thinking about within the markets for the week ahead. So we're just over at the weekly market watchlist reports. If you are a member within the IYF community, simply on the Education Centre, click Market Watch List, and you'll come down to the watch list view here, and then the most apparent one should be first. So in our case, we've got the 28th to the 1st of November. So it opens up the watch list nicely. There's some key events to look out for in the week, and then we're straight into the indexes and then down into the pairings. So firstly, let's have a little bit of a discussion, and then we're going to discuss a couple of the first currency pairings analysed within the weekly watch list for your free viewing. So firstly, we had a great week last time out, as you can see from our positions of the week video posted on Saturday. In terms of data and news and fundamentals, the week is starting relatively quiet, but then from Wednesday onwards we have PMIs, CPIs, GDPs, rate decisions, and that's not even mentioning the NFP because it's the first Friday of November, the new month, and FOMC as well. Of course, we have the key events outlined here. If you wish to take them on board, they will be affecting positions from Wednesday onwards. So yeah, I mean, it's always a bit of a sticky one at the start of the month and the end of the month, because ranges and options and option expiries mainly are coming to the end of the month. There's certain currency pairings that need to move back into a certain range before the new month and stuff like that. So we expect a lot of movement, and obviously there's always a lot of fundamental news at the start of a month as well. So firstly, we always analyse in our watch list the dollar index and gold to start with, to give a general idea around, because these obviously affect other currency pairings. But for the purpose of this video, we're going to go straight down into our first currency pairing, which is the euro to the dollar. So following from last week's corrective phase, we're now approaching a level of high value around the 61.8% Fibonacci point, as you can see on the chart here, daily 50 EMA and structure. So we're remaining on high alert, as this is the first area of interest for us to take a look at a potential long position. Now it's retraced a little bit on the euro dollar. And that's on the daily. And when we move down into the 4-hourly, the price is entering our first level of interest as well. So we're keeping an eye out on the lower time frames for a declaration and multiple rejections from the area of confluence. Of course, don't rule out a deeper retracement further into the golden pocket level, which all of you who are members will know about from our head trader strategy series. And if not, we're just basically looking for it to move down into the 61.8 level before a potential buy up to the upside for the euro dollar. So that's what we're going to be keeping an eye on, but we want a little bit more movement to the downside before eyeing up a good long position in euro dollar. Our second position, our trade of the week that we're looking for, is dollar Swissy. So a deeper retracement than expected, although we are now within an area of high probability. So our golden pocket, as you can see, 61.8 to 71, and therefore we should be on high alert, the same as euro dollar, for a reason to go short in this circumstance. We're above the daily 50 EMA, but the higher time frame directional bias is short, as prices failed to make a new high and printed a new low, which is very simple for those of you who follow our head trader strategy. It's made a new low rather than a new high. So we're definitely looking for a short on this position, as well as it being within our golden pocket area on the Fibonacci's. On the 4-hour, the less aggressive approach would be to enter on a break and retest of the 1-hour 50 EMA and TL, which is per the reversal strategy as well. So we are looking for a short once the correct levels are hit and more checking has been done on dollar Swissy. And then down into another, our third currency we're going to go through in this video is the Canadian dollar to the yen. So on the daily, we're following from a break in bearish structure and price printing a new high. So the directional bias has now been switched to a bullish potential position. So like most major currencies, we saw a notable corrective PA last week, with this pair decelerating in the form of an ascending channel rejection previous structure, as you can see here. So coming into the 4-hourly, we're looking for a further breakdown of the intraday timeframes, and we may be presented with a decent counter trend trade. Alternatively, for those that want to trade the trend, we're basically suggesting that you pay close attention to the first area of interest at the 38.2% Fibonacci, as you can see here, as well as the 82% level, the previous structure, and the daily 50 EMA for potential long positions and continuation of trend for the CAD Gen. And you know what, I love Euro Yen. We've had some good positions on this recently. We're going to walk through our analysis of this one as well to finish the video. So on the daily, we're looking at higher highs and higher lows have been confirmed on the longer term bias, which is bullish. However, following from a confirmed rejection of the minus 27% fib extension and previous structure last week, we managed to capitalize on a reversal trade and we saw price roll over correctively. Due to further developments, we'll be personally waiting for price to retrace deeper and looking for regions to go long. So we're looking for retractions and then going back strong after this in a long position. So a third touching of the ascending TL would be our optimal area of interest. So we're looking for it to come back down to here. Golden pocket, 71% fib, all the way back down to touch the ascending TL. And on the 4-hourly, the same, we're looking for the first area of interest to watch, which is the 38.2% level, expecting a pullback to this level and seeing if it then goes further down and potentially can hit the area of interest, which is the third touch on a TL. So potentially developing trade there, but for us this week, that's a couple of the trades. Of course, for all of our analysis, as you can see, we've got a lot of it on here, and to have access to these weekly watch lists, feel free to check out our site, iwaftrading.com, and see how you can gain access to that through one of the available membership options. So that's all for this video. Have a great week on the markets. I wish you the best of luck. Trade safe. Remember to be very, very risk averse, and of course manage your positions correctly. And I'll see you all on the next video.